Good morning. Welcome to Trading with Larry. Larry can't make it today, but you may have noticed me here every day. I'm Eric Shamilov, and we're joined again with Larry's analyst, Clint Brewer. How are you, Clint?
Good. How's it going this morning?
It's going okay, and it's pretty interesting that we are doing this podcast right as the CPI report is coming out. And it just feels like every single CPI report is the most important CPI report of our lives. Have you noticed that?
Yes. I feel like investor focus kind of rotates on what the narrative is behind the market, and yeah, I mean that narrative recently has definitely been inflation. I thought maybe the narrative was going to shift to bond auctions there a while back, and we had the poor 20-year, but no, I think the narrative is going to stay on inflation. Yeah, I was just looking at the number. It looks like the headline CPI came in up 2.4% year over year. That's a little less than estimates for 2.5. The core number is up 2.8%. Estimate was 2.9. So we'll see if I know it's a slight uptick from the last month, but it was below estimates. So we'll see what the market reaction to that one is.
Yeah, you mentioned headlines and narratives, and I think today is there's no better example of false narratives driving markets and then getting proved wrong than what we see with inflation numbers coming um, in relation to tariffs. Everybody was like, tariffs are going to cause massive inflation. We just haven't seen any of that. And a lot of people don't know, I think, what to make of that. But again, you're having an inflation report that just came out, um, basically driving home this idea that when you trade on narratives in the market, it's not really, it's set up
Yeah,
for disaster. You're off almost going against the narrative.
yeah. I think one thing you'll really want to watch closely with inflation coming up. I mean, it's easy to get wrapped up in these month-to-month reports, and yeah, I mean, we've seen a huge call it disinflation trend. I think in mid 2022, that CPI number was at 9% year over year. Now it's 2.4%. But the one thing to really keep an eye on is some of these business surveys. So like the ISM, they do their manufacturing and service sector survey. And a lot of these Fed districts, they'll do something very similar. And one of the questions they ask as part of these surveys of manufacturers and other businesses is the prices paid trend. So how are prices that you're paying for goods for your business? How is that evolving? And you've seen those shoot up across the board, especially since some of the tariff stuff started going into effect. And this can have kind of a call it 3 to 6 month lead time before you start to see it show up in some of the inflation numbers. And so, I would say, that's a good number today, but I would also stay kind of glued to what some of these surveys are saying about those prices paid measures and if those are staying elevated or not. I think if those stay elevated, there's a great chance that you see inflation ticking back up here in a couple months.
I think that's a great point. Very interesting point. So, do you think that retailers are kind of hiding their cost increases for now and aren't because
Oh,
at the end, are they transferring this to the end user to the buyer, or are they waiting?
yeah, that's a good question. I think based on the latest evidence that I've seen, I think they're eating that cost. You had Walmart come out, was that a couple weeks ago, and say, oh, this was back in mid-May, and they said we have no other choice. We can't absorb this. We're going to have to raise prices, and that immediately drew backlash from Trump. So then, meanwhile, other retailers, Target, they're saying last thing I saw was that price increases were kind of the last resort for them. I think retailers in general are eating the tariffs right now. That's because there's going to be a number come out. So we got CPI today. PPI comes out tomorrow or Friday. Watch, there's a number inside the PPI report called trade services. And what trade services measures is how much, it's basically a profit margin for retailers. and trade services fell by like the second is the second largest monthly drop in the last 15 years last month. So pay attention to what I'll be looking at that number when PPI comes out next to see if that's continued, because that drop implies that right now at least retailers are eating the cost. They're not passing it on. So, and it's, for investors, I mean, what's the bigger evil? I mean, is it retailers taking an earnings hit and you see an earnings hit to the market, or is it that as a consumer you might see higher inflation down the road? I mean, which is pick your poison, I
Well,
guess.
I mean, the earnings hit. Um, I'm actually also glad you mentioned the lag. We were kind of, I think there is a lag when it comes to the CPI. I think yesterday I put up a chart of the CRB Commodities Index, and that's been on the rise. And I think it's trading at like a 18-month high or something like that. So there is a lag between commodities prices and what we see in the CPI. It's usually, as you said, about 3 to 6 months. So, for instance, in 2022, when we hit peak inflation right under 10%, everybody was going crazy about it. Commodities were already kind of falling, and they started falling pretty hard. And by the time people realized there was disinflation, the commodities index was already down like 15 to 20%. So
Yeah,
now it's kind of on the rise again. So there's going to be a lag. I agree with you. But right now, investors are kind of myopic in what they're looking at and
yeah.
what they're being influenced by. And I say myopic in terms of kind of choosing what narrative to focus on. And right now, inflation is definitely not on their radar.
Yeah, for one thing, a good point on the commodities. One thing I would watch with commodities specifically, to those watching, is watch copper. You can watch ticker CPER if you don't worry about trying to pull up, watching futures markets or anything. But ticker CPER. And the reason I bring up copper is because I saw a study recently. Copper has the highest beta to inflation of any other commodity. And so beta, that's just a way of saying what's the price sensitivity of an asset price or a stock price to something. Well, copper has the highest inflation beta to inflation. So that's one area I would really stay glued to if you think, to see if inflation is going to become a problem down the road, because copper prices aren't too far below their all-time high. And that's an important. I can't remember if it's around the $5 per pound level, but I mean that's a really important resistance level going back. And if we start to move above that level, I mean that tells you, that would tell you something, in my opinion, about inflation coming down the road. Or if it stays contained, then it stays contained. But I think that's yeah, commodities are definitely an area to watch. But if I was going to pick out one specifically to target, I would watch copper for the inflation outlook.
That's interesting that you mentioned copper. Copper's called, affectionately called Dr. Copper,
Yep.
right? And people like to look at copper. I think there's a lot to it. Uh, some of the research I've done, I don't know. I saw oil as the number one driver, but in terms of predicting CPI in the future, not with beta. So that's an interesting thing. Something to look into on my end. But the reaction here today on the CPI news seems to be aggressively positive. But I think commodities are up on this news, aren't they? Gold is up.
I just saw gold was up 1%. Yeah.
Yeah, gold is up. So why are commodities going up with this disinflationary report? But the market is going up with it. S&P 500, I think, futures are up now as we speak. Almost 50 basis points. The Nasdaq is up 55 basis points. And you know what's really moving? I think is the Russell 2000. That's in a bull market now. I think the Russell is up 1.6% today. So small caps are a must watch today. What do you think about small caps? Uh, do you invest in them, and how do
Yeah,
you
I
look
mean,
at?
yeah, I mean, you can trade. I mean, I invest in small caps more on an individual stock basis. Whenever I see a trade opportunity there, I don't necessarily have a market cap screen. I more trade the setup than a specific stock or asset class. But I think the one thing to watch with small caps is they're very sensitive to the interest rate outlook. And small caps started to rip, soon after, or actually they were moving higher, so moved higher into kind of post election, but then and that
Yeah,
happened after the Fed started to raise rates, or I'm sorry, that happened after the Fed started to cut rates in September, and then all of a sudden, when the rate outlook got called into question, is when you saw small caps really start to reverse lower.
yeah,
And
yeah.
so I think
Right.
there's again, pick your narrative. Their narrative around the outlook for the Fed. I mean, they've keep saying how they're on hold. You've seen market implied odds for rate cuts kind of shift to fewer cuts now versus at the start of the year. I think there could be maybe something, especially with this inflation report today. What does that say about the rate outlook, and what does the bump in small caps we're seeing here recently say about the rate outlook?
I mean, do you think rates are going down?
Or maybe small caps are saying they do think rates are going down, or maybe not that rates are. Maybe that there's with today's inflation number, if we are seeing more deceleration, because I mean, look, Fed funds is the highest above inflation since like the financial crisis, or heading into the financial crisis. So I mean, I don't think you can say that. You can't say that rates aren't in restrictive territory, because they are. But Powell's been very steadfast on not wanting to budge there, pending what happens with the inflation picture with tariffs, and then with today's latest evidence of falling inflation, does that stoke some hopes on seeing more rate cuts this year, which would I think that's a big the rate outlook is a big catalyst for the small cap trade right now. Let's put it that way.
Well, if you think there's going to be a lag in inflation, we're going to see that later on. Wouldn't rates go up, and that would also mean that small caps are probably going to be a pretty good short at some point.
Yeah.
Right?
I'm looking at the recent action in small caps against what's happening right now with inflation. But yeah, I do believe I don't know that I would be going into small caps as a longer term hold right here, but I'm just more saying the recent action in small caps off the lows. And if you're seeing, I think you mentioned that small caps were up pretty strong after futures after the CPI number. Um, but that, in my mind, that would be kind of the narrative driving small caps higher, is that investors are becoming more favorable on the inflation and rate outlook. Which, yeah, I don't necessarily agree that that's what's coming in the next 3 to 6 months, but that could be what's driving the reaction here near term.
Yeah, the market seems to have nothing but good news. We have another. I wish Larry was here to really bash this idea, but the U.S. and China seem to have come to an agreement. I'm not sure what that agreement is. It just sounds like they're agreeing to agree what they agreed on in May in
Yeah.
Geneva. So
Oh,
I don't know.
the headlines are there's few headlines. There's not really any details around what the agreement is. It's just that they keep using the word framework. That's the word I keep seeing around all these trade deals, so to speak,
I
coming
hate that
out, is
word.
that they're
It's
frameworks.
such a
Um,
buzzword. Framework.
yeah, I mean, a framework is just it's like an agreement to continue negotiations is really all it is.
Uh,
Probably the biggest news out of what happened overnight was, or that I saw at least, was that the U.S. might ease some of the export controls on semiconductors. which
Yeah,
in turn, the U.S. is going to want access to rare earth metals. But one thing I saw that was interesting, and I don't know if this was a typo. So Trump was posting on X or wherever after this thing saying that U.S.
true.
tariffs on China were still going to be at 55%, and that
Exactly.
China tariffs
That's
against the
exactly
U.S. were
what I
10.
that's exactly what I wanted to bring up.
Yeah,
And we were talking about this yesterday, and we have been talking about this for a while. What is the outcome people are expecting specifically? And I don't think you ask the average investor. I don't think they have a clue. I think the average investor is just looking at, unfortunately, is just looking at the lines on a chart. But you ask people that are kind of moving the market, like, well, what do they expect? It's as if they expect these tariff rates to go back to zero. But as you just mentioned, it's still going to be 55, and I think the administration needs the revenue for the tariffs to accomplish what they have been seeking to accomplish. So tariffs are going to be in place no matter how good the trade deals are. Would you
yeah.
agree with that?
I
Yeah.
do because I mean, well, look, I mean, like I said, I don't know if that was a typo or what, because I think the tariff rate right now is 30%. So it's going from 30 to 55. Like that's that's part of the framework for continuing
Oh,
negotiations.
you're saying there's a typo in there, and he
Yeah, is
really
there
meant.
is there I mean is there an error potentially? I don't know. We'll get more clarity I'm
I
sure this morning.
think
But
at this
either
point he
e-
forgot what the rate is because these
yeah,
rates are changing so
yeah.
fast, and he's
Even
probably
even I think
referencing
you
something from like a month ago.
yeah. I mean I think you asked the right question though. I mean, regard 30 versus 55, who cares? Like what's kind of the end game? And I don't think anyone really knows. I mean, is it if he truly wants to bring manufacturing back to the US, you have to do something to incentivize that. Even if it's something as that can be as harsh as tariffs, or is it really just a bargaining chip to get some kind of an agreement deal in place, and then if these things go away, then you're kind of left in the same place with manufacturing. So I I don't think anyone really has a firm understanding of what the ultimate
I don't think
goal
it's
is.
it's just I don't think it's just a negotiation tactic because U.S. companies are acting on the premise that this is exactly what he wants. So, like for instance, GM I think announced uh, a few $1 billion in investment into manufacturing stuff here yesterday, if I'm not mistaken. But you're seeing that. So these companies are acting on the premise that he does want to bring this stuff back here.
Yeah, but if it's a company, I mean, GM can say that, but I mean, when will they actually break ground on doing something? It's like
Oh,
by the time you're moving ahead or getting into some of these projects, like there could be a new administration. It's like how is a company, especially a car manufacturer, where I mean, we wrote this up recently in one of Larry's reports, but I mean, just breaking down, the costs involved and the time involved to, build a new manufacturing plant for an automaker, or even, even bringing a closed, like if you have the plant, bringing a closed plant back online and tooling it for, to start making vehicles again is just, the sums of money involved are huge, and it's a long lead time. It's just how, especially when you're a big manufacturer, like how in the world are you supposed to plan all this out? And I mean, you can say something because it's what Trump or whoever wants to hear, but when do you do you kind of sit on your hands and wait and see what happens? Because yeah, I mean, it's just how do you? I don't know. I don't understand how a company like GM plans around this.
so yeah, it's probably at least a 3 to 5 year um, full turnaround from getting these factories up and running and training. Training the workforce is also a big thing. But you're hearing these announcements. So I'm glad you mentioned a write up that you did for Larry, and you've been working with Larry, and you've been working with the opportunistic trader for a while. Um, you're involved in all of the products, and Larry has a few of them. What is the best way, do you think, that people that subscribe to Larry, so but not just Larry, but just in general, like how you see the newsletter industry and what the best way a user of these newsletters can get, how do they get the most out of it? Because there are
Yeah.
trades that come out, right? There's trade alerts, there's the research pieces.
Yep.
Um, you see all the comments and feedback from subscribers. So, what's your experience with that?
Yeah. So that's a great question. There's a lot of different ways to go there. So I mean, I would say for first and foremost, if you're an investor or you're a trader, and you're considering signing up for subscribing to a service, make sure you've done some research behind the individual offering that service. You want to understand their credentials, their background, their experiences, and someone like Larry, um, there's been plenty. I mean, featured in the hedge fund market wizards book. I mean, his track record's known, his background's known. So I mean, you know what you're getting with Larry. You're getting the experience and that track record. From there, I would just say, depending on the level of experience that you have and the level that you want to commit to trading. I mean, we have different products for that. If you're trying to understand kind of how Larry views the world and you're just starting to get your feet wet, I mean, definitely make sure you sign up for Trading with Larry Benedict's e-letter. That is completely free. We send that out just about every day during the week, so you can sign up for
Do
that.
you
But
do you
then,
write that letter?
yeah,
Are
I help
you?
write that letter. Yeah, I
Mhm.
help I help write that letter. So we publish that again. That's completely free. And then from there's different levels. If you're just getting started, then I would definitely look at One Ticker Trader. That's a great product to get started with. The volume of trades there is not as much as what we do in some other services, but it also presents a great thematic way of approaching the markets, because what we do there is we write up a research report every month that we send out to our subscribers at the start of the month. And what we've done this year specifically is, before even tariffs and trade wars and all that was known, we had a sense, we knew that there was going to be a lot more volatility coming into this year, just how things were setting up. And so to take advantage of that, we expanded what we call our trading themes. So if you kind of take a top-down thematic view of what's happening in the economy and how you expect that to trickle through to the markets, we thought there were going to be a lot of opportunities to trade, and so we expanded One Ticker Trader to encompassing 5 themes. That's what we've been looking at so far year to date. And so we've been looking at areas like the housing market, Bitcoin, tech stocks through QQQ, and a couple other areas. And we'll target those areas for trades. And year to date, we've done 20 trades there, closed trades. We've had a gain on about 90% of them, and we're up a little over $17 per contract. So, I would say, cumulatively. So I would say that's a good place to get started. And then
Yeah, I
if
mean, 17. So for the people that are watching, 17 points. If you're just doing one options contract, right? How many trades was that on 17 points?
20 trades so far.
20 trades. So you put on 20 trades at the minimum. If you do one contract on those 20 trades, you pick up, roughly speaking, $1,700,
Yep,
right?
cumulatively throughout the year. Yep.
And what's the cost of this service on a monthly basis?
I don't want to quote that because I don't know off the top of my head.
But
I
it's
I
something
focus on the
maybe.
research. I focus on the research, not saying the pricing, but it's a lower price point.
Yeah, so it kind of pays for itself. Yeah, that would be a great place for people to
Yeah.
start, right?
Yeah, and then from
How does
there,
that product work? It's like one theme. It's a thematic thing for the month, right, or for the
So
quarter.
it used to be just one theme we would focus on for the month, and
Mhm.
that this year we've expanded that to 5 themes. So we've increased our frequency of trading as we've brought in a larger number of ticker symbols that we want to look at for trades on a month to month basis. And again, that's kind of driven by that macro top down view of what's happening in the economy, how that's going to trickle through to the stock market, and then the flow through impact to specific sectors or other areas of the market like Bitcoin or oil. Um, or bond prices. I mean, looking at yields with TLT like we are talking about yesterday. I mean, those are all opportunities that we've brought into kind of our basket of trading themes that we're looking at so far this year. But that's one ticker trader. And then if if you like one ticker trader, or if you're a trader with a little bit more experience, and you're looking to execute a larger number of trades, then the next level is really opportunistic trader, which is kind of I mean, that's the flagship service, so to speak. Um, and again, it's just a broader opportunity set of individual stocks and different tickers that we're looking at, and we're more active there. So we did, I'd say, 20 trades in one ticker trader so far this year. In opportunistic trader, we've done 55. We've had a 71% win rate on those, and the total gain per contract this year on that one is over $20 per contract, so 20.77.
So, what would you say to people that are already subscribing? A lot of, a big issue is the dissemination of the trade alerts, I think, right? And so the market is moving, it doesn't wait for anyone. You guys send out an alert. What do you tell the person that is trying to execute the trade? Maybe they got the email or they
Yeah.
got the alert, and now it's an hour later or half an hour later, and they're trying to put in the trade, and the prices are different.
Yep.
What would you say to somebody like that?
Yeah, I mean, look, we get these trades out quickly when Larry sees them. They come across via email, but we also have an app where you can receive notifications to your phone. So there are a number of ways for you to be notified instantly when those trades do come out. We try to keep the alerts very simple. It's just a simple instruction on if we're buying to open something or selling to close a position, and we just give the ticker, the strike price, the expiration date, if it's a call or a put, but then we'll include a buy up to price on there as well. So we're giving some
Yeah,
guidance on, don't chase this off. If you didn't get in on it right away, don't, go back to the option, look at it. If it's still below this level we gave
yeah,
you, it's still good to go into the trade. So we're giving guidance on what level you want to be at or below if you're adding a new position, especially if you missed it initially.
yeah. So I would just add, if people feel like they missed an alert, just based on how many trades you guys are putting out, they shouldn't worry because there's just another one
Yeah, there's going to be
on the
another
way.
trade. Yeah,
There's always another trade. So you mentioned crypto. Um, we know Larry's thoughts on crypto,
yep.
right? We know that. But what are your thoughts on crypto? What do you think?
My thought on crypto is that it is a very speculative asset class, and that makes it a great trading vehicle. And that's it. I
That's
mean,
it.
greed gets amplified on the upside, and fear gets amplified on the downside. And I think following what's happening in crypto is a great way to follow kind of the risk sentiment in general in the market as well. Yeah, I mean, look, I'm not going to be some guy getting up on his pedestal and going over all the virtues of Bitcoin and all the problems it solved. But I definitely look at Bitcoin and some of these other crypto linked stocks as trading vehicles, and ways to take advantage of kind of the prevailing mood of the market, so to speak. Which again, when that gets really amplified on the upside or downside, there can be some great trading opportunities there. We had a heck of a run so far this year trading one of the Bitcoin ETFs and one ticker trader. I don't have the numbers off the top of my head, but we've done a number of trades there, and I believe every single one of them has been for a gain on both calls and puts. So betting on the upside and the downside.
No way. Larry was betting on calls.
He had a call. He had at least one.
I love that. I love that. So, I mean, I take the opposite view. Um, I think it's much more than a trading vehicle. And, you just had the Circle IPO come out, and they're big into
Yeah.
it's all about stable coins. And I think stable coins are the next wave of interest for investors when it comes to crypto. I heard the CEO of MoneyGram on Bloomberg News talk talk about stable coins, and a lot of these companies like MoneyGram, uh, PayPal, Block, right? All of these companies, they're excited about the prospect of continued deregulation, being able to use this kind of stuff to speed things up, and just a chart that I would like to share. The one that I'm looking at, I bought a little bit of Ethereum yesterday to pair with my Bitcoin and my chain link and all that. I wish Larry was here so we could fight about this, right? But I'm seeing a little bit of a technical breakout. You mentioned you look at this like a trading vehicle.
I've
Well, from a
I've been
trading
watching
point of
that. I've
view,
been watching that same range, Eric. Yeah.
yep, you see the range, right? You've been watching the same range.
Yes.
That's great. What do you
Yep.
think?
I mean,
Is
no
this a
denying.
breakout?
I think it's bullish. Yeah. I mean, I think it's a. To me, it looks like a continuation breakout off of. I don't have Ethereum in front of me, but I assume that was it made a low back in early April or so. So yeah, I mean, I know there's some Ethereum ETFs out there tracking this. I don't know if you have a preference on if you're not buying the actual crypto itself, if you have an opinion on the best ETF to to play this one.
I don't personally. I don't play ETFs. So for some of my clients, I will, but not from. I know that there is an ETF out there. I forget the name of it, but I don't trade it. I just trade the actual coin.
Yeah, yeah, I would. I mean, look, I that looks like whether you want to call it a let's pull up the chart. I just found one. EETH is the ProShares Ether ETF. And yeah, I mean, you
What
know,
was that ticker again?
EETH.
What was that ticker again?
Yeah, EETH is the
Are there
ticker.
options on it?
Yeah, that's a
I
good
wonder if it
question.
has an option.
I don't know, but yeah, I mean, that looks like a continuation, whether it's just a rectangle or almost looks like a pennant pattern to an extent, but still that you're coming off of that early April low. I mean, yeah, that looks like a good breakout to me.
So I'm good on this trade. I should keep it. Is that what you're saying?
I think
Okay.
I would, for me, I would keep it for now. You can
Yeah.
so with those pattern. I mean, so again, I'm looking at who knows if this will play out, but I mean, if that is like a continuation bull pennant type pattern, usually the move you get, the measured move, is equivalent to went what happened before the pattern, which was about a $15 gain, 15-point gain on this ETF that I'm watching, and it's at 50. The breakout is above the 50 level, so that would imply you should target $65 on the ETF. Again, that's a big assumption that the measured move holds true, but that's one way you can try to come up with a price target using those patterns.
Um, just watching the market here. pretty significantly off its highs in the futures. Still up pretty good. I think enough to create more of a bullish feel at the open. But I'm starting to get a little bit of a sense that maybe we have a reversal day today. What do
Yeah,
you
we'll
think?
see. We didn't really talk about it, but I mean, the futures were down following this whole framework deal between the U.S. and China. I mean, is there, then yeah, we popped higher off the CPI number, but then as
Yeah,
you
all the
mentioned,
good news is out already, right? All the
the
good
good news
news
is
is out.
out, and yeah,
Market,
is there
market,
some,
yeah.
are we finally getting some fatigue over all the tariff trade war headlines? Are the response that we've had in the market? I mean, it makes it sound like those like that's going away. That shouldn't even be potential as a catalyst. But what we're getting so far are frameworks and not deals, and is that increasing that risk again?
But
That's something that
I always
happened.
wonder, the market can be this stupid to assume that tariffs are like they can't like. I tell myself all the time, but then I prove myself wrong, and I'm like, yeah, the market is that stupid.
Here's what. So, all right. I feel like the 2011 sell-off was a really good analog to what happens with tariffs because it's a very binary event. So 2011 was all around the debt ceiling and the potential for a U.S. default, and you had the S&P fall. It was like 18% in a couple weeks. All right, and it culminated in S&P downgrading the U.S. for the first time. Um, so again, kind of a very much a binary event. Is the U.S. going to default or not? This is a very binary event. Are we in a trade war or not? We're still waiting to see the outcome of that. What was interesting back then is that you had the sell off into August, and then you had a rally off the lows. The rally off the lows retraced maybe half the decline, and then we went back and retested the lows. So my base case coming out of April was that we would see a rally, but that we would retrace part of it and then go back and retest the lows. But now, that was clearly wrong, and now here we are, right back within what, a percent or so of the prior highs. Um, so I don't know. I mean, it's been pretty incredible to see the market reaction. The other thing I would note about it is that I saw a chart earlier this week, forward earning estimates for the S&P 500 at an all-time high. So earnings estimates for the next 12 months, that figure dropped heading into April. It is now at a new all-time high. And so analysts are pricing zero impact to earnings, which I find pretty incredible. But at the same time, we'll the most recent quarterly reporting period was
I would break that down by sector. So I think
yeah,
I think you'll probably see something different between the tech sector and industrials. Maybe.
yeah. So that's just something interesting that's
Actually,
happened alongside this
I
movement.
wanted to ask you about that. What you just mentioned with the earnings estimates. Even with those earnings estimates, like you mentioned, going up. You look at the Nasdaq valuation right now as we speak. It's at 28, right back to so that includes these earnings estimates that you talked about,
Yeah,
right? And even with those increased earnings estimates, you still have a now price to earnings multiple, I think on a individual tech stock tends to be completely meaningless, right? Where P matters, I think, is in more cash flow now companies. P for like an individual, like you can't look at P when you're trading Tesla, which I
no,
stupidly got out of yesterday. Out of my calls, I wish I kept them a little bit longer, but whatever.
yeah,
Like Larry says, you got to put a P on the page, right?
that's right.
But on an index level, PE I think is very important, and we're at 28. on the Nasdaq, and that's kind of like back to bubble territory.
Yeah, I mean
How do
it's
you view this?
well what we've wrote about in the e-letter is that whether it's the S&P or especially the Nasdaq, like you point out, I mean these things are priced for perfection. So you know you have you have to have the earnings follow through to justify where the price is. And growth. I can't remember the Nasdaq versus its historical average, but I know growth stocks in general are trading large cap growth is trading at a 50% premium to its long term average. And so, in my opinion, that
Did you say fifty
leaves.
percent premium? Did you say fifty
Yeah, they're
percent
trading at
premium?
a 50% PE premium to their 20-year average, large cap growth. So you can't really have any. I think that's what helped drive the downside in April is that we're right back to those valuation levels. If there's any question around the outlook around meeting that earnings number to justify where price is at, um, that leaves them more susceptible to downside than upside here, in my opinion. Especially, we're talking about the earnings outlook, but especially if you throw the interest rate kicker into it. We're talking about long-term yields yesterday. If long-term rates rise at 10, all else being equal, that tends to pressure valuations too. So you've got the dual impact of the earnings outlook you need to watch, but then you need to keep an eye on interest rates too, because both of those things can impact where that PE ratio goes from here.
It's uh, it's interesting you mentioned that kind of 20-year average or something like that.
Yeah.
I looked at. I think what you'll see is the average much lower pre-COVID, and then after COVID, it like legged up a couple of levels, and the average over the since COVID has been much higher than the average before COVID. And as long as I think the government prints, right, that's probably maybe that's here to stay. I'm not sure.
Well, what's the saying? The market can stay irrational for longer than you and I can stay solvent.
Let's stay solvent though. Let's trade
So
well.
stay solvent. To today's message.
It's funny you mentioned that trading and like long term investing is two completely different things. Like you can have an outlook on the market, and Larry always brings up a term. I'm gonna borrow your bullishness, or I'll borrow your bearishness for a while, right? So trading, and I think it's a completely different kind of skill set than kind of a longer term view.
Yeah, absolutely. And you know, look, different styles suit different people. I mean, you have to know kind of your personality and your ability to take on risk. But I think whether the one common theme connecting them, though, I would say for trading and long term investors is you got to have a risk management plan, and that's something we focus on big time across all of Larry's services, whether that's talking about how much capital you're putting at risk or using a stop loss on some of our positions. Risk management is the key to longevity in the game.
So, what are you looking at for today? What's interesting for you today?
Honestly, what am going to watch today is something you alluded to earlier. I'm going to watch the Open, but I'm going to be really interested to see how we close. If we start to string together a couple days here, because we've seen this just a little bit recently, but if we start to see more days of strong opens and weak finishes, I think that's telling you something about the state of the trend that we're at least, finally starting to get a little bit exhausted here on the upside. The other thing I would watch is that if I'm wrong and the risk sentiment is there, then keep watching, like your Ether ETF or position. Watch Bitcoin as it's hovering right below this record level. Watch stocks like I can't remember the one you mentioned yesterday, but watch stocks like Rocket Lab,
Oh,
Strategy.
yeah, I mentioned AST Space Mobile and
Yeah,
Aqua.
so watch Rocket Lab in that same space because it's close to a what I would call a breakout level, MSTR, and I had one more in mind that's slipping. Oh, maybe like a Hims and Her Health. Just watch. watch those for kind of the mood on risk sentiment because they're trading right below their prior highs. And if those things start to break out, then maybe there's more to go.
Interesting. Yeah, on my end, uh, so last Friday, the S&P 500 was supposed to include a new stock into its index.
Yeah,
They wound up coming out with no changes, no new entrance into the index, and there were a few stocks that people thought could make it, and they got really bid up. Robinhood was one of them,
Hood, Hood and Apple Oven,
right?
right?
AppLovin, and even more of a Interactive Brokers was another. LNG, which is my favorite, and a lot of that news was a disappointment. All these stocks dropped this week, so I'm kind of looking at that basket, thinking, okay, maybe if I want to get long, maybe a couple of stocks in that basket would potentially work. So I'm looking at Robinhood, AppLovin as a potential play back to the upside. Um, but for the market in general, I'm kind of thinking in the back of my head, maybe this is a day not to chase the market higher, but instead to look for a reversal. But we'll see.
Yep.
We will see. The straddle is at 29 on the S&P 500, implying the options market is pricing in no more than a 30-point move up or down from the open. We will see if that sticks. The
It seems
straddle
seems
has
low
been a
on a
short,
CPI day.
well, on a CPI day, exactly.
Yeah.
Lately, the market has stayed within its straddle. At some point, it's going to break it. I'm not sure if it's today, but market pricing in continued low volatility, so we shall see. Clint, I'm sorry, you wanna wrap us up?
Yeah, like I said, I would just watch the open, watch the close, and see if we start to see a persistent trend of weak closes. I think that would tell you that there's some exhaustion finally coming into the market.
All right. Well, thank you all for joining us. Join us again tomorrow morning, and have a great rest of your day.